Hi everyone, welcome to another update on the stock screener. After having done the gold miner and silver miner break-even costs, let's do a short video on the copper miner break-even costs. So I only have 3 favorite copper miners, and we're going to look at their costs. Costs include the all-in sustaining costs, interest expense, capex, and taxes. That's the only way to value miners. You need to take into account all the costs. So let's start with Capstone Copper. I used to like Capstone Copper. It's a pure copper play, so it has a lot of leverage to the copper price. Very high mine life, probably 50 years. They are in good jurisdictions, America, Mexico, and Chile. However, Chile is not that good recently anymore. But you can see the share price has gone up, doubled. So that's a very good return. Let's take a look at the break-even costs. So we have a break-even cost of 5, next year 3.5, and then 2.5. Why is it 5? Because they have this Santo Domingo project, which requires a lot of capex, and we need to include that capex as well. It's a very big project. It's around a capex of $2 billion, and the market cap is only 3 billion, 4 billion in CAD. Also, take a look at the enterprise value. It's at 7 billion. So they have quite a lot of debt, from 4 billion to 7 billion. So take that into account. If you buy a company with a high enterprise value, then they need to pay off that debt first. So I think Capstone Copper is a bit overvalued at this moment. Based on the break-evens, actually pretty low margin, 3.5. In the future, when they put Santo Domingo in production, then of course we get to a lower cost, and then there is a bit of upside. Currently we are at 4 billion market cap. There could be some upside if copper rises from 4 billion maybe to 5 to 6 billion. But yeah, it really depends on the copper price. And when you look at the cash flows, you can see that the cash flows are pretty flat for the coming years because they need to put that money back into the ground by building Santo Domingo. So not a lot of upside in cash flows in the coming years. After they have built it, then you can see cash flow coming in. But even then, it's still below our enterprise value. This is a 10% discount rate. So you need to wait a long time before you get your money back at a 10% discount rate. So if copper rises, of course, this whole curve will shift higher, maybe $5 to $6 copper, then we do have a lot of upside potential. It could double, triple based on the multiple, of course. I have only used 5x multiple. Typical copper companies trade at 7, 8 multiple. So there could be some upside if copper rises. So that's the first company. Pretty good, high mine life and leverage to copper. Second one is Ero Copper. Why did I take this one? Because Ero Copper actually has a connection with Soma Gold. So this gray area here, that's Tucumã. That's the Tucumã property in Brazil that's going in production next year. And Soma Gold has a 1.5% net smelter royalty on that. When you calculate the production at the $4 copper, then Soma Gold could get around 5 million per year on that. Now the mine life is not that great, it's only 5 years, but with exploration this can be increased. 5 million per year, but Ero Copper can buy back 1% of that net smelter royalty, so maybe 1 million per year. Also, Soma Gold will be paid 6 million from Ero Copper to acquire this property. They still need to pay 6 million to Soma Gold. So that's free money. I think we will get around 10 to 15 million for Soma Gold on this. So that's free money for Soma Gold. Now, let's talk a bit about Ero Copper now. Production is going to increase with the Tucumã project. This is going to peak out here and then start to flatten out around this level. It has pretty high mine life, 10 to 15 years. And you can see the cash flows coming in here at a 10% discount rate. In the first few years, it will not generate cash flow because they need to build the Tucumã project. So growth capital will be a bit high and then it will go down a bit. So there is some capex expense that is coming in, and that's why the break-even cost is at $3, even though the all-in sustaining costs are around $1.50. So yeah, it's a very good project. Break even at 3, and in the coming years, break even at 2.5. Copper price currently at 3.8, so this is a good buy if you like high margin projects. But the market cap is already at 2 billion and the enterprise value at 2.5 billion. So they have quite a lot of debt. Yeah, I think it's fair value. At 3 and 3.8 copper, I see a bit of downside risk on a 5 times net earnings basis. If you take 10 times net earnings, okay, then I think we are fair value. Taking into account that next year production will rise and keep on rising in 2025. So just wait a few years, production will go up, costs will come down, and we will be at fair value with upside if copper goes up. But even then, look at NPV, you will need to wait more than 10 years to get your money back. So I don't think this one is buyable for me. I would like to see more upside than this. And that's where Trigon Metals comes in. So Trigon Metals, market cap only 50 million. So 50 million CAD, they did a private placement, so this is not correct anymore. It's now around 50 million. They do have some cash on hand, 20 million, so enterprise value is a bit lower. Probably at 30 million, but they will need to use that cash to build the underground mine. They are still constructing the underground mine, which will come online next year. So that capital is about 20 million, and then they also need to build the other part, the Assis Far West underground, which will also cost around 30 million. So a lot of capital that needs to be put in the mine first. So in the beginning, we have a break-even cost at 5.5, not profitable yet. But next year, they will be producing from the underground. And that brings the costs down to $3, taking into account also the capex that they need to build the Assis Far West. And once that's completed, then we get to 2025, 2026, and that's when the break-even cost will go to 1.7, which is very low. You can see that here how the costs are coming down in function of time and how production is going to rise tenfold from 4 million to 40 million and then even to 60 million. So this is a once in a lifetime opportunity to buy immense cash flow. That cash flow will come in from next year and then 2025. So I'm going to just hold this one and see it go up 10x. So just look at this chart here. This is the cash flow chart and the enterprise value. The cash flows will at some point in 2026 rise above the enterprise value. And it will keep on rising to 10 times that enterprise value. Now compare this to Ero Copper, where you always stay under the enterprise value. So the cash flows come in and it will never reach the enterprise value of this company. Here it will go above the enterprise value, 10 times. Same with Capstone Copper. The cash flow is going to drop again by building Santo Domingo. Then it will come back in, but it will never reach that enterprise value in the next 10 years. Maybe in about 20, 30 years after, it will reach it, but not in the next 10 years. Here as well. Here, on the other hand, we have a 10x in the enterprise value. So just by looking at these charts, you know already which company has the most upside, and that's Trigon Metals. Also on this chart, you can see at the current copper price of 3.8, the upside is immense, from 50 market cap to 500 market cap. So it's confirmed also by this chart that the upside is a 10x, because the cash flows are coming in like crazy. If copper goes to $5, the upside is from 50 to 800. So that's 15x, 16x. So plenty of upside in this company. They just need to get through the first 2 years of building the underground, and then the rest will come. So summary of the break-even costs. Ero Copper is currently the cheapest in break-evens. Then we have Capstone, then Trigon Metals. But in a few years from now, Trigon Metals will win because they will have the lowest costs compared to Capstone and Ero Copper. So you could say that these are the hares and Trigon Metals is a tortoise, which will win in the end. And I'm betting on the tortoise to win this match. That was the intermezzo on the copper miners, and I'll see you in the next video.